Good day, Divergence traders. How y'all doing? Today is Tuesday, August 29. Almost time to pay the rent and the mortgage again. Yeah, I'm not a fan of the end of the month when all the freaking bills come in. Are you? Probably not. Yeah, one big money grab for the elites. They grab it from every which way, left, right, and center. You go buy something, you pay taxes. You go to work, you pay taxes. Yeah. And then through BlackRock, they make profits. So where does all the good people's money go? I think you know where it goes. Okay. Let's take a look at the setups now. We're looking at the NAS 100. There was divergence all over the charts today. All over the place. Here's the first one. This is like a double bottom if you ask me. Did it come all the way? No. Does it have to? No. Close enough, man. Look what they bought off to a T. What's this called? The blue line. This is the pivot, the main pivot. This is the first pivot off the main pivot, up, second, and third, which I like to call R1, R2, R3. And then if we were to go the other way, we have S1, S2, S3, which is support 1, 2, 3. Very important indicator, that indicator, let me tell you, along with my whole numbers indicator. Okay, that shows you the whole numbers, 15,200, 15,250. We have the 50s in between the whole numbers. 15,300. See how we came almost to that line today. Okay? So anyway, our first entry would have been right after the market opened, 5 minutes later, and it pulled back once. You could either have taken the entry right here in the close of this candle long. You would have suffered a little bit of drawdown. Or you could have took the entry with less risk. Okay, you could have bought this lower closing candle and up we go. Lower closing candle, up we go. Lower closing candle, up we go. And even up here, lower closing candle, up we go. Had to be careful on this one. That's the last one. Like I said before, the most reliable pullback candle entries, okay, buy the dips, buy the dip, sell the rip, okay. The most accurate one is the first one that sets up, and the second one's still good. Third one, you don't know for sure, but it was good today. Definitely don't. I wouldn't want to buy a dip up here. Just no. It could fail on you. Okay? And the old saying, buy low, sell high. So you buy down here, low, and you sell up here, high. That's it. Okay. Let's move on now to the Dow Jones Industrial Average. What do we have here? We have a low, a retracement, and a lower low. There it is. And we got, the perfect setup with the indicator. So we would have got long right in there just before the open. See, right there's the open, 1630, the baton right there. See the baton? Got a wick on the top and a wick on the bottom. Yeah. So if you would have got long right there, your stop would be down here. 39 points, and how much did we go up? Well, we went up 200. Right to 34,750. To a T, 37,450. Okay? Lots of points there. If you missed the entry here, or right here, you could have got in on this lower closing candle right here. Did it have much of a lower close? No, but as long as you see red, okay, red right there, that's a lower closing candle. You would have bought it on the open, up it goes. And then here you'd wait till price came close to the 5. See, this is the 5. Johnny 5 come alive. You would not take it on this close. You'd wait for a closer close to the 5. I like to call in between these two moving averages. Oh, Jason, learn how to talk again. I like to call that the zone. This is the zone, the trading zone. This is where you look to buy. You don't want to buy it up here because it's going to come down and you're going to freak out and you're going to close the trade and you're going to lose. See what I'm saying? That's why you don't want to buy it up here in an uptrend. You want to buy the dip down here. Buy the dip, sell the rip right up here. Okay? And once again, you don't want to sell here in an uptrend because it might keep going. But this time you got lucky and it came down. Did you take profit here? No. People probably would have held on and said, oh, this is it. This is it. It's going to go all the way back down. No, and then it goes up and they lose. That's the scenarios. There's an old saying. If you don't take it, the market will. And it's simple as that. So in an uptrend, how do we know this is an uptrend? Well, it's very simple. The 5 is above the 7. The 5 is the slower moving average, and the 7, okay, is the higher moving average. Now, let me show you what my moving averages are, just in case you want to know. It's a 7-period exponential on the close, shift 1. Yeah, you gotta put in the 1 in there, okay? And this is MetaTrader. On NinjaTrader, you gotta do it. 7 and 1 again. It's a different schematic, but that's how you gotta do it. So this is how it tells you to begin with. Can I buy? The 5 is above the 7, all the way up. See? So when that's happening, what does it tell you? It already makes up 50% of your mind. It tells you, hello, I can only buy here. I can only buy a dip if I was smart. I don't want to buy at the top and then it comes down and I freak out and I get out and I close it with a loss. You don't want to close it with a loss, okay? Sorry if I'm yelling today. I'm just a little on edge today. Okay, that's the trades on the Dow Jones Industrial Average. Okay. Was there divergence up here? Oh, yeah, I guess there was. But, you know, there was divergence here, too, to buy it right here, and up it went. Didn't go too far, but went far enough. Okay. Yes, we did have divergence up here. Just like that. You would have got short somewhere in here. I don't know if I'd want to sell it right here after it just crashed down 85, 92 points. I'd wait for a pullback. So instead of shorting there, I would have tried to sell it somewhere as it rallied up in here. And that's it. And down it goes, and you make some money. 38 points it went down. Well, if you got in up here, it went down 50 points. So from here to here, yeah, see, you didn't get your 1-to-1 yet. If it keeps going down, you'll get it. If not, it's going to go up. Let's now look at the S and the P. And what do we have here? Same thing. Divergence. See that? Is it perfect? No, but good enough. Once price, see, this isn't telling you to buy just because it came to the pivot and it's almost created a double bottom. What tells you to buy is when the 5 is above the 7. Then you look to buy a dip somewhere along the way, on the way up. Lower close, buy, up it goes. Lower close, buy, up it goes. Lower close, buy, up it goes. See that, ladies and gents? Gotta love it. I show you successful ways to trade here along with the divergence. Let's take a look at oil now. Woo! Look at oil. A crazy motherfucker. Goes all the way fook down. How much? Like 100 and something. All the way down to there from right there, 140 points. Or ticks, or whatever you want to, or whatever the hell you want to call it. Shit. I couldn't get those words out. I'm sorry. As you know, if you've been watching this channel, I have some health issues. Please excuse them. Okay. Let's look for the divergence here, eh? Let's make this bigger. All right. Where's it? Well, let's start off smaller. Let me show you. So the divergence is right here. I think it's there, right there, something like that. No, it's there. There's the divergence. Where did we get in the trade? Over here. Why didn't we get in here? Or here, or here? Okay? Why didn't we sell here? Or sell here? Why didn't we sell in those spots? Because the 5 didn't cross down below the 7 yet. That's why. All right. So the entry was here. Let me show you. Right there. You would have got short, and your stop would have been so small, only 16 ticks. It would have went against you 8 ticks, and then it went down 132 tickers. Okay? Gotta love that. The OSMA was red all the way down. See how the OSMA got you in over here? If you were following the OSMA colors. And then they would have got your stop in here. Okay. So then we put in a low, a retracement, a lower low, right? That's all genuine and good. But is it down here? No, because this side of the valley needs to be lower than this side. Okay? And it's not. So they both would be like, look, low and lower low. See? Even if I drew it, oh, it's right there. Is that divergent? No, 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 no. This needs to be up like this for it to be divergent, and it's not divergent. There's no divergence to buy. No, 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 no. I don't want to delete the OSMA. I want to delete the trend line. There's no divergence there, ladies and gentlemen. Maybe there is on a 1 minute, maybe, but not on the 5. Okay? But anyway, looks like they're taking it back up today. Maybe they'll take it to new highs. Who knows? Maybe oil's going to go over $120 again. Okay, let's look at gold now. Look at that, eh? Look at that slow meltdown, eh? Oh, just like that aluminum alloy out in Maui. It's just slowly, you know, flowing downhill. Yeah. Just like that aluminum alloy out in Maui. Okay. Where's the divergence here, right, ladies and gentlemen? I'll show you. It was the meltdown. Let me show you. So we have a low and a lower low. And we have this on the indicator. So it told you to buy right there at exactly 5 minutes to 9. If you would have bought, went up 175 points, ticks, whatever you want to call them, to the top. Gotta like that. Beautiful trade. Pound yen, what did it do? Well, we have a double top here. Just like that. That's double top. And just like that. We got short in there. Stop would have been 24 pips. This is the pound yen. it would have went against you 13 pips and went down about 90 pips to the bottom, ladies and gents. Gotta like that. And it had a sell trade along the way. It actually had 2 sell trades. Let me show you. See that little blue there, blue doodah? Yeah, right back into the 5, into the zone, baby, into the trade zone. So you would have sold right there and went down 28 pips. Now what happened here? We had another higher close in almost into the zone, the trade zone again. So what would you do on the opening of this candle? You would sell it, baby. Sell right there and down it goes. 55 pips. And once again, here's the third trade. Sell, higher close, down it goes. Higher close, down it goes. And higher close, down it goes. That's 3 winning trades. Okay? There's like a no thinker, no brainer. It's like, you just look at the chart. Okay, there's one. It's all below the moving averages. Okay, just sell here, take the profit. Right? And sell here and take the profit. That's it. It's very simple. Okay, let's look at the EJ now, the Euro Yen. What do we have here? Whoa, we have a high, a retracement, a deep retracement, and a higher high. So we take that right from there down into there. Yeah, right there. Oh, good enough. Close enough. We'll put it there even. Okay? So where would have you got short on this trade? I'll show you. I'll show you. So you would have got short on the close or wait for a retracement. I would have took the less risk setup right here to buy it when price came back to the 5. Now, you're probably going, why is he calling that a less risk entry? To enter after the market has gone back up against me if I would have took the trade right here and sold it here. Why is there less risk? Well, let me tell you. If by chance the market rallied up all the way back up from here, actually from down here, if you sold it down here on the opening of this blue candle right here, okay, say it rallied right back up to your stop, you would have lost 30 points. Okay? Now, if the same scenario happened and it did rally back up, but say we got short right here. We got short here this time, not down here. See? We got short right there. We would only lose 22 pips because we got in at a better price. You see what I'm saying, ladies and gents? So that's why professional traders would rather sell at a better price than a worse price. Because if it goes wrong on you, you're going to lose less money. You see what I'm saying? And also, if it goes right on you, you're going to make more money because you got in at a higher price and you're making more points. See what I mean? See, from there to there, that's 30 points. If you would have got in here, see, it's 23 points. A difference of 7 points. I just wanted to show you that. I've been meaning to do it for a while. I couldn't put the words together before. Like I told you, I have some health issues. So let's move on now to the last pair of the day. That's some good information I just showed you there. I had that taught to me by a Asian guy from Chicago, Illinois. Hats off to you, Dave Lynn. Hats off to you, buddy. Yeah, he doesn't do trading anymore. He works for BMW now, I think, out of Illinois somewhere. Okay. Let's look at the pound now. Oh, look at the pound, look at the pound. Look at that double bottom. Woo! Beautiful thing right here. Right there, ladies and gentlemen. I don't even have to put a line there because S2's there, but I'll put the line right there. Double bottom, perfect double bottom to the exact price. See that? That's why it's perfectly straight. And right here, to right here. Yes, indeed. So you would have got long right there. If you waited for a better price, well, no, that was the better price right there. Okay. So if you would have got long right there, just as the 5 crossed up over the 7, when the pound dollar went up 62 pips. I bet you that's a double top on the 1 minute. Not a double top, but a high and a higher high. So we have a high, a lower high, and a higher high. Hi, how are ya? Hi, how are ya? Yes. Salute to my native friends up north. That's how they sing and say, hi, how are ya? At the same time. Yeah, they're good people. I love all native people all over the world, whether it's in Lahaina, whether it's in North Bay, Canada, whether it's in Australia. I love all the natives because all this land that we're now standing on belonged to them to begin with. Yes, indeed. Anyway, so you would have got short right here. 16 pips. Stop. You definitely got your 16 pips. You got your 32 pips, 2-to-1 win-loss ratio right there. Here's another trade right here. I'll show you. This is the 1 minute, ladies and gentlemen. We have a low, a retracement, and a lower low. Okay? And right there, like that. You would have got long right there. Stop would have been 10 pips, and it went up 17, almost 18 pips thus far. Once again, my name is Jason Sweezy, and I am a divergence trader. I trade divergence with a passion. I believe out of all my years of experience, that is over 20 years, 21 years, 22 years, the best strategy I ever came across is divergence. And then when you couple that with support and resistance, and sometimes use trend lines, those are the 3 powerful things. And then the levels, of course. You need your levels. That's why I have my levels on there. That's why you see all those lines on my chart. Because they tell me to get into a trade sometimes. Sometimes they tell me don't. Don't sell. Don't sell. Stay out. Kick that little devil off your shoulders who's telling you to do all these things you don't want to do. Yeah. So anyway, I want to thank you for watching and listening today. I really appreciate it. And if you could be so kind to tap your little like button and give us a thumbs up. And hopefully you learned some stuff today. And if you haven't subscribed yet, please do. I'd love to see you here tomorrow. I'll show you some more setups. Successful setups, that is. All right. Good luck and good trading.